Welcome back. In what comes as some cushion for the government a week ahead of the budget, advanced direct tax collections till the 11th of July came in at 5,74,000 crore rupees. This is higher by 20% compared to the same period last fiscal. Let's quickly take you through the main components. Net corporate tax collections for FY25 till the 11th of July came in over 2 lakh crores. That's a rise of over 12% on a year-on-year basis. The net income tax collections during the same period came in at 3,46,000 crores, registering a growth of over 21%. The personal income tax collections were boosted by a rise in the securities transaction tax and enhanced TDS collections. Securities transaction tax, which is charged on the purchase and sale of securities like stocks, mutual funds, derivatives, saw 128% rise. To take this forward, I'm now joined by Rumki Majumdar, economist at Deloitte India, and Aditi Nair, chief economist at ICRA. Thank you very much for joining us. Aditi, if I can begin with you, do you think these robust tax collections give more fiscal headroom to the government, and how do you expect the government to use these revenues?
Thanks, Parikshit. In any case, thank you. Even when we saw the provisional numbers for FY24, they had exceeded the revised estimates for the overall tax collections, and the numbers that you just read out is also adding to the same conviction that we do expect to see the overall tax collections being revised up in the budget that will be presented next week as compared to what was put into the interim budget estimate. So we are looking at a gross increase in the tax collections of around 40,000 crore. A portion of that will be shared with the state government. So we're conservatively estimating that the tax collections on a net basis will be higher than the interim budget estimates by 20,000 crore. Now, this is modest, and of course, we have a much larger revenue upside coming in from the non-tax revenues, with the RBI dividend being much higher than what was penciled into the interim budget.
Okay. I would now like to go across to Rumki Majumdar. Rumki Majumdar, looking at the tax collections right now, what kind of initiatives do you expect the government to take to increase tax collections, the direct tax collections, including STT and also personal income tax?
Thanks, Parikshit. So the government has been seeing a very solid contribution coming from direct taxes and indirect taxes. But more prominently, what we have noticed is that the direct taxes from individuals has actually increased, and this probably reflects the broadening of the tax collection base. So we would expect this to continue, and this being the month where people file taxes, I'm sure there will be probably this month also you will see a big number coming up. Going forward, we expect this individual taxes to remain high, and even corporate taxes may go up, given that we are expecting a lot of investments coming in the private sector, a lot of activity picking up in the later half of the year. So those segments will also go up quite significantly is what we expect.
Right. Also, Aditi, do you think this is definitely going to be helping the government in its fiscal consolidation path?
So, Parikshit, overall, our estimate is that the revenue upside is going to be about 1.2 trillion rupees in the full budget as compared to the interim budget. So then the question is, how should this be channelized? Capital expenditure, revenue expenditure, or faster fiscal consolidation? Now, we've already seen capital expenditure contracting in the first 2 months of this year, which was entirely expected amidst the parliamentary elections. And by the time we have the full budget being presented, the monsoon is now fully underway. So, it's going to be another couple of months of some amount of lull as far as project execution is concerned. And by the time the monsoon winds down, there'll be a lot of headroom left to spend in any case. And it'll be quite a tall ask to basically get all of that, capex completed before the fiscal year ends. So our sense is, at this juncture, it may not be very fruitful to add to the revenue upside to a higher capex number. It might be more fruitful to actually look at splitting it between revenue expenditure and or some tax relief, and equally, to actually reduce the fiscal deficit as compared to the interim budget target.
Right. Rumki, now, according to you, which are some of the areas where the government must focus on in the budget? Now, we're talking about increased fiscal headroom. What are some of the options before the government, some that Deloitte may have recommended to the government where it can increase spending and capex?
Right. So what we believe is that given now the government will have more revenue to itself, it will prioritize spending on something which is much more long term. And this government has always been focused on long term growth, improving the competitiveness. So we expect a lot more spending on infrastructure, which has been the government has been doing so far. And also will probably be focusing on upskilling, reskilling of the workforce, because given that we are seeing the whole workplace transformation with technology, we need to ensure that the demographic dividend that we have is potentially tapped. So that is where another area that we expect. Education and health will be some of the measures in terms of social expenses. We do not expect much on spending towards like low subsidies and all, because this is the government which has been always looking at how to improve income in the hands by giving them opportunities for in the long term, and that is where I think the government will probably bring in some schemes that promote PLI in the MSMEs, which can create jobs, which in turn will create more income in the hands of people. So we expect all these money that the government has to route it through more prudent ways of spending to create long-term jobs, long-term assets, etc.
Right. Aditi, coming to you now, in terms of tax reforms that are needed right now, in terms of uncertainty due to judicial pronouncements, legislative changes, what are some of the clarities that are needed, clarifications that are needed, and reforms on the tax side that could help the industry and also the personal income taxpayer?
So I think, first I want to kind of go back to the question you asked, Rumki, in terms of where do we see this additional spending being channelized. So what we've seen in the last year is that overall the growth rate has been really high for the Indian economy. But within that, consumption growth has been modest. And the sense that I have is that there is a huge amount of unevenness in consumption across rural and urban India and within urban India. So perhaps, it may be a good idea to kind of channelize some of this revenue upside to trying to even out some of these consumption, some of the unevenness that we've seen in consumption. And particularly some measures to support the rural economy is something that could very quickly flow through the system. When new schemes are introduced, they actually take quite long to operationalize. It takes a few quarters, and you don't end up actually getting a lot of spend out within the same fiscal year, especially when it's a full budget like this, which is getting presented in the second quarter, and by the time it gets passed by Parliament and you move to the implementation stage, new schemes will actually take quite a bit of time to operationalize after that. So in the very near term, perhaps, adding to some of the existing schemes, particularly some of the rural focused ones, that is something that the government could potentially consider doing. And similarly, on the income tax side, some amount of, an increase in the threshold for personal income tax, that is something that could help to boost sentiment for the salaried individuals.
All right, Aditi Nair, Rumki Majumdar, thank you very much for joining us on the program. From direct taxes, we move to